Topic 5. Other transactions. In these videos, we're going to go through some of those transactions we often see in the business, and also we're going to talk about tax-related transaction. Okay, first, let's talk about applying a loan and paying interest. Sometimes if we need cash, and we will apply for a loan, and recording a loan is very straightforward in QuickBooks. Right, basically we apply the loan, we get money, we deposit money, at the same time we own bank payables. So we're gonna use a bank deposit to record a loan. For example, we apply and get loan approved on January the 1st. Then it will be one of the bank. If not, we're gonna set up a new. Alright, so we're gonna add a new for example, the ABC Bank. We can add ABC Bank as a new vendor. Okay. Then the account we're going to record a deposit, it will become a loan payable or notes payables, depends on. So this is a description. Let's say this is a 1 year loan. 1 year loan. The annual rate is 12%, and the amount is $12,000. So the $12,000 for a year, and we have agreement with the bank that we're gonna pay principal and interest monthly. So every month we're gonna pay $1,000 principal and approximately $120 interest every month. We're gonna set up a bill from the bank. Okay, the bill date will be the last day of January. And two accounts will be there. We have loan payables. $1,000. Oh, not here. $1,000 loan payables. This is a principal. And also we have interest expense, approximately $120. This is for the month of January. And actually we want to make this recurring because every month we're going to do the same thing. Okay, so we're going to click this Make Recurring button. So we're going to schedule recurring bill from bank. And we want to receive monthly. The bill is the last day of every month, starting from January, and end after how many occurrences? 12 occurrences. So that 12 payment, that's it. And we're going to schedule about 7 days in advance, so we're going to receive a notice. Okay. Looks good. So save a template. All right. So we do have a place to view all the recurring transactions where we have the gear button. Click the recurring transactions. Okay, we have a few available. For example, the telephone bill is recurring, fixed amount, and the monthly building lease is fixed. Okay, now we have a new one that's loan payment. The first bill we're going to receive is the end of January. Okay, so we're going to wait. If we're close to the end of January, the bill will pop out, and then we're gonna pay for it. Okay, next let's talk about the bad debt expense and bad debt allowance. To get bad debt expense, there are two ways to do bad debt expense, right? Cash basis and accrue basis. For cash basis, whenever we observe a bad debt, we're going to book an expense. Very straightforward. And under accrue basis, we're going to use the bad debt allowance, okay, to book bad debt expense in advance. And use allowance as a provision for future bad debt. So let's talk about these two and how we're going to record bad debt expense in QuickBooks. So I'm not going to build new accounts. We have talked about adding new accounts, for example, the bad debt allowance in QuickBooks. So I'm going to skip that part. So what we can do, because bad debt expense is an adjusting entries, right? There's no cash involved. We can just record a journal entry. Can record a journal entry. For example, the journal entry is for the month of January. So the two accounts we're going to debit, right? Bad debt expense. For example, that's $100, and we're going to credit accounts receivable, $100. And we can also specify which customer account will be write off. For example, you're gonna write off Amy Bird's secretary account and save and close. Okay. All right. So if we go to the customer Amy Bird, right, the account receivable has been written off by $100 because of bad debt. So alternatively, we can book bad debt expense with product service item. Specifically, we're going to use the service item to book bad debt expense. Okay, so I already created a new service. Create a new service called bad debt. So the name is bad debt, and this service is associated with the expense account, bad debt expense account, and it's non-taxable. Okay, save and close. Now, whenever I want to write off customers' receivables, I will create a credit memo. For example, this is for, I'm going to write off Amy's secretary's receivables. I am going to create a credit memo for the product service. I call this bad debt. Okay, so this credit memo means I'm going to incur a bad debt expense and reduce accounts receivable. For example, the amount, let's say, another $100. And save and close. Okay, so let's go back to Amy's bad account. What's happening here is this $100 credit memo is applied to Amy's Bird account. So since we have enabled automatic credit applying, which is you can check the right here we automatically apply credits is turned on. So whenever we issue those credit memos, it will apply to customers' balance automatically. If that option is off, okay, then we're gonna here click receive payment from that customer and apply the credit. Gonna do the same thing. Okay, that's for the cash basis bad debt expense. Then how about the allowance, the accrual basis? We're gonna book the bad debt allowance and use that allowance to write off accounts receivable later. So the bad debt allowance is a recurring transactions. Basically, every month we're going to do the same transactions. So I'm going to go to the recurring transactions. Okay, I'm going to create a new recurring transactions. I will just call this a journal entry. Bad debt allowance. Which is scheduled, let's say, 7 days early. We want this monthly and by the last day of every month. Okay, starting from this month and never ends. Okay, the journal entry we're gonna debit bad debt expense. Okay, we're gonna put a default amount. Later we can change that amount later on. And we're gonna credit the allowance for bad debt. So basically every month we're gonna automatically post these transactions. Okay, and if you want to get more allowance, right, increase this amount. Fewer allowance, you reduce this amount. Go save template. Next we're gonna write off. Okay, whenever we decide to write off, we're gonna book the bad debt service. Now the difference is now this: when we book bad debt service, we're gonna write off accounts receivables, but we no longer post an expense because expense has been posted already. So I'm going to modify the service item. Okay, the service item will be modified for allowance method. It's no longer linked to bad debt expense. Instead, I'm going to link this to the allowance for bad debt. So every time we book like a credit memo, we book a service, it's going to debit allowance for bad debt and credit accounts receivable. Okay, so that's accrue-based bad debt method. Next, let's talk about purchase of fixed assets. Right? In the previous videos, we talked about how to create fixed asset account. We created fixed asset account called computer. Okay, so let's assume we purchased a computer. Right, so I'm going to purchase a computer from the vendor. So I paid anyway, I paid a hardware store to get a computer. January the 1st. Alright, I'm going to select the asset called computer. Computer. That's original cost. Let's say spend $800. Okay, looks good. So we're going to save and close. Now we paid $800 and we got a computer. If you check chart of accounts now for computer, okay, the original cost will be $800. Now with the fixed assets, we can also book depreciation. Assume the salvage value of the computer is $200, so the depreciable base will be $600. And also assume we're going to use computer for 5 years. The monthly depreciation expense will be $10. Okay, that's fixed. So we're going to book create a recurring journal entry again. So we call this computer depreciation. So we want it monthly, the last day of every month. Okay, starting from this month, and we're gonna do this for 5 years. or 60 times, right? 5 years, 60 times, yes. So the account we're going to book is we're going to debit depreciation expense. Debit $10. And we're going to credit accumulated depreciation is a sub-account of computer. $10. Going to save template. Okay. All right. So every month we're going to post a $10 depreciation expense. Okay. Okay, let's talk about payroll accounting in QuickBooks Online. Okay, so we do have a payroll here, and payroll is a premium for QuickBooks Online subscription. Okay, let's wait so most likely for the test drive we're gonna see an error message. Okay, but sometimes it works. Let's see for the employee, the payroll functions. It's not available for now, but I do have some videos I recorded previously. Okay, just gonna show you what payroll accounting has. Okay, the basic format and procedures will be the same. Okay. Because this is an add-on feature, so let's turn payroll on. Okay, now we've turned payroll on, and as you can see, we have a different employee list because, right, the test drive loaded a new company, a new sample company. Okay. When we first use QuickBooks Online Payroll, we will complete a series setting. So we're going to adjust our preferences. We're going to do that with the gear, right? As you can see, we're going to have a payroll setting. So these are the default setting for the sample company. Let's take a look to see what do we have. Okay, for electronic services, okay, we can set up the federal e-pay or e-file and the state e-pay or e-file electronic services, because now all the tax payment are electronic versions. And next is pay policies. So we're going to decide our pay schedules. We're going to pay weekly, quarterly, monthly, and here the default the pay frequency is weekly, every Monday for this sample company. And we do have some vacation sick leave policies, right? Vacation pay and sick leave pay. And of course you can create new or edit the existing, right? You can add more if you want. Alright, we have also tax set up, and these are for the sample company. As you can see, we have both the state and the federal level the tax agency addresses and their account numbers, and the tax rate, payroll tax rate. So yeah, if we set up a brand new company, we need to find out those numbers and put into QuickBooks Online. Next will be deductions, the payroll deductions. For the sample company, currently we have 401k deductions, right? We have insurance deductions, the dental insurance, I believe, dental insurance deductions, but this is medical insurance deductions. You can add more deductions, for example, child care and many other deductions if you want. And finally, it's a preference setting. So for demonstration purposes, we're not going to we're not going to change anything here. Okay, you leave them in the default preferences. And we're going to go back to dashboard employee. Use the payroll preferences. We go back to my payroll window. And here we're going to see a snapshot of the current payroll cost, an employee list. We have 3 employees. The first 2 there, they have an annual compensation and with a payment method of direct deposit. And the third one, named Carries, is paid by hours and by check. Okay? If you click their names, you have a chance to edit all the details about pay, profile, and employment. But we're not going to change these settings. Instead, we're going to create a new employee. So we're going to add a new employee. Okay, we put the names, but it says we have our suppliers have the same name, so we cannot hire supplier or hire vendor. It's against internal controls, right? So we're gonna find out a new names for that. Okay, so name new employee Z Yan. So we can edit W4 form, which is employee withholding allowance form. Okay, let's fill in all this information. Right, I finished the form with the fake social security number and the fake address. Right, I chose allowance 2 for federal level and 2 for the state level. Okay, then I click down. Seems the social security number cannot be processed. Just shrink a little bit. You should be able to find a number for social security number. Okay, and then we're gonna set the pay weekly every Friday and pay by hours, $20 per hour, right? And we do have some deductions. Okay, 401k, which will be paid based on the amount of gross pay, let's say 6%, and the employee is going to match another 6%, which is pretty good. We can also add another deductions. Let's say we have a health insurance with a fixed amount. Every week we pay, let's say, $50. Okay, and the companies also pay $50 insurance premium. Okay, and we set the default payment is paid by paper check based on 40 hours per week. We have a sample check. The sample check for me, basically, if we have worked 40 hours a week, which might be different. So we're going to talk about timesheet pretty soon. Assuming I worked 40 hours, okay, but gross pay is $800, and after deduct the 401k and health insurance, and after deduct all the tax withheld, right, federal, social security, Medicare, and the state level tax, okay, my net pay will be $591. But this is not a total cost for compensation. And for employee, we also have additional cost, right? Remember, we have to match the 401k. We have to pay employees insurance also. So, and other payroll taxes. So we have additional cost. And you can also put the profile, just add new employees, ZEN, and finish the profile. Right, by selecting the gender and employment history, putting the hire date and also the birth date, I believe. Put the birth date over there, and we can select it down. Okay, so back to the employee windows. You can see we have 4 employees right now. So it's time to run payroll. For running payroll, we're going to calculate the amount we're going to pay employees and the amount we can owe to government agencies, which is a tax. Okay, we check the payroll. Remember, we pay employees every week, so the last payment is September the 7th. If you click, as you can see, we already issued checks or deposit directly on September the 7th. Okay. Now we're going to run payroll for the next week, basically, right? Which is from the September 8th to the next payment date, 14th. So we're going to run payroll. Okay, for the first 2 employees, their salaries, or they have annual salaries, so it's fixed. We can put some overtime hours or sick pay leaves hours. And for the next 2 employees, salary is determined by the actual hours. So let's put the hours they have worked. So later we're going to talk about timesheet for how to track and record and track the hours employees have worked. Okay, and that's it. So we can preview the payroll. I got warnings that I put too many sick hours for my employees. Anyway, and as you can see, this after we run the payroll, the total cost increased. Right, this is our annual cost so far. So we're going to submit the payroll. All right. By submitting the payroll, the next window is the pay window, right? We're going to direct deposit to payment to these 2 employees, and we're going to print and send check to Carrie and me. Okay. Alright, let's print paychecks. Alright, these are the 2 checks we're going to send. And also we're going to print pay stubs because we have a 2 direct deposit on September 14th. Okay, these are the pay stubs for the direct deposit. Alright, we're going to finish the payroll. I get a window says we have tax payment due, because once we run the payroll, we're going to have, right, tax payable. So let's review what kind of tax do we have. And these are the tax we owe to the government. As you can see, we have state and the federal level tax. These two, I believe, is from the last payroll, and these two is from the current payroll. Okay, so we can create payment to pay those. Let's say we create payment to the California state. Going to create payment, and all the information has been fairly neat. So just click ePay, and we're going to send payment to the state of California. Okay, then we got payment confirmation, ePay successfully, right there. Now we only owe three taxes. Okay. Alright, hope you can get an idea what is a payroll accounting in QuickBooks. Okay, whenever you have a chance, you can check whether this function is working or not. Alright, so also in the payroll function, we have our contractors. Okay, this is our place we can pay contractors and also prepare the 1099 form. Okay. So currently we have only one contractor listed. The reason is when we create a vendor, okay, let's go back to the vendor. And check this Rosenheim Insurance Agency. We edit in the information, we see we have checked these track payments for 1099. Okay, if we select this, and this vendor will be listed in the contractor window. So let's find another contractor or vendor. Let's try to track the 1099 payment. For example, we're going to select this bookkeeping contractor. Books by Basic we use a lot. So I'm going to also select track payment for 1099. But the amount is too small. I'm going to select a one with a large payment. Also, I'm going to pick Robson and Associates. And also track payments for 1099. So for any contractors that potentially we're going to issue 1099, it's better to select these. Okay. So they will be listed in this window, contractors. Now, assume we are preparing for 1099, which is required, right? And here for this year, the deadline is January the 28th. Okay, there are a couple ways to finish 1099. Okay. And QuickBooks offer an easy way to file 1099. Basically, we're going to put my information, our company's information, including tax IDs. Okay, I don't have a tax ID for now. Say tax ID. All right, and we're going to select the payment types. Very likely for all these contractors, they are non-employee compensation. To track their payments, better to select all the related expenses account. For example, accounting, advertising, right, and other expenses in which we used to pay these contractors, just for example. Or you can select more, okay, and other payments types which are unusual. Now we're going to select contractors. Of course, we need their tax ID to file the 1099. And this is for review purposes. Okay, the system tells me only contractors, right, with a $600 thresholds will be listed for 1099. Currently we have none, so we don't have any contractors to file. But if we have eligible contractors, it will be listed. Okay, then we can just finish preparing and then file. The two ways to file, we can do the e-file or gonna print and mail. Of course, these are premiums, okay? But 1099 is not that easy. It's not that difficult to file. So once you have all the contractors listed, you can always file by yourself, okay, without paying these premiums. All right, this is something for the contractors under the payroll functions. So let's also talk about this is taxes. We have two taxes available. We have sales taxes and then payroll taxes. Then we briefly mentioned payroll taxes in the previous in the videos recorded earlier. And also we have a sales tax. The sales tax in QuickBooks Online is not that I should say advanced, because it works for small companies who is operating in a few locations. But if you're talking about a company who's doing business nationwide, then the sales tax will be really complicated. And here you see why. Because we're going to set up the business addresses, okay? And for the sample companies, it's only deal with two tax agencies, California and Tucson, okay? But we can add more tax agencies. But think about it. If you are selling to nationwide, you're dealing with so many tax agencies. It's better to use add-on sales tax app or apply additional sales tax software to help you do the sales tax, especially for paying the sales tax. Right, we can always change the sales tax rate. Okay, once we set up the sales tax rate, when we make the sales, okay, we have an option to select sales. To select the sales tax when we sales inventories to customers. And here we have the filing frequencies. We can select. You can want file monthly, quarterly, yearly. Here, it's I believe it's California rules. Okay, if your monthly liabilities below 100, file annually. We can file quarterly if you have more liabilities. If you have a lot of liabilities, you have to file quarterly. That's required. So I select yearly. Alright, this is a basic setup of the sales tax. So whenever we sell items to customers, the sales tax center will record the liability to the government agencies. Okay? They can either file electronically or you have to log into their website to file the sales tax. Alright. Another function that is new here is mileage. Okay, it's very useful to record the trip and the related cost for a small business. Right, and you can explore these functions by yourself. Alright.